All right, everybody, welcome back for another deep dive.
Yeah.
Today, we're going to be taking a look at something called price action trading.
Ooh.
And this might sound a little intimidating,
It does.
but honestly,
Yeah.
it's really not. We've got this awesome trading guide we're going to be looking at today, and it breaks it all down into really clear steps.
5 steps. Right.
Exactly, 5 steps. And this is just a small snippet from a much larger piece. But even in this small section, there's a lot to unpack.
Absolutely.
So I'm excited. Have you ever wished you could read the market like a book?
All the time.
Right? Be able to spot those trends and the dips and all those good opportunities before anybody else.
Yeah. Wouldn't that be great?
That is basically what price action trading can do for you. And we're not talking about like getting rich quick schemes or anything like that.
Yeah.
It's really about making smart decisions based on what the market's actually doing. All right, so let's jump into this 5-step plan this guide lays out. Step number 1 is all about building a watch list. But the thing is, it says that you need to focus on what are called liquid markets.
Right.
But what does that even mean?
Okay, so picture this.
Yeah.
You're trying to sell like a rare comic book.
Okay.
It might take you like forever to find the right buyer. And you might have to lower your price just to make the sale. Oh, that's low liquidity. But if you were trying to sell like a popular video game, you probably have tons of buyers right away and you won't have to haggle on the price, right?
Right.
That's high liquidity and that's what you want in trading.
Okay, that makes sense.
Yeah.
So basically it's like you're picking the right marketplace to make those trades.
Exactly.
The guide mentions a few examples like stocks, forex, and futures. Do you have any favorite liquid markets?
I do.
Okay.
I mean, you can't go wrong with major stock indices like the S&P 500 or the NASDAQ Q. Tons of buyers and sellers, making it super easy to get in and out of positions whenever you want.
Makes sense. All right, so we've got our watch list build. What's next?
So now we got to find those good trades, right?
Yeah.
Step 2 is all about finding signals. And this guy, it keeps talking about this thing called backtesting.
Backtesting, yeah.
What's that all about?
Yeah, it sounds kind of technical. I don't really know.
So imagine being able to test your trading strategy, but like using 10 years of market data in just a few minutes.
Wow.
That's backtesting. It's like a simulator for traders. And, there's a lot of research out there that shows that these simple price action patterns can actually outperform those fancy, complicated algorithms.
Wow. Okay. So it's not just following your gut.
Yeah.
It's about looking at the history, finding the patterns that actually, work.
Right.
Okay. I like that.
Exactly.
So now we're getting to the scary part, for me at least.
Oh.
Step number 3 is sizing positions. And, this is deciding how much to risk on a trade. And honestly, I already feel the pressure just talking about this.
I hear you. It can definitely feel a bit overwhelming.
Yeah.
Position sizing, it's about finding that sweet spot between maximizing your profits while also managing your risk. It's easy to get tempted to go all in when you think you've got a sure thing. But, it's important to remember that every trade could go against you.
Okay, so basically don't put all your eggs in one basket.
Exactly.
Okay, good advice. But, how do you figure out the right amount to risk?
Well, volatility is key here.
Volatility.
If a stock's price is going up and down like crazy, you're going to want to risk less compared to, a stock that's more stable.
Okay, so don't choose a basket that's tipping over.
Exact. Got it. And speaking of baskets, the guide mentions something called correlations.
Correlations.
This is how different markets kind of move in relation to each other. So think about it. If you're holding a ton of tech stocks and suddenly the entire tech sector takes a nosedive, your whole portfolio could go down with it.
Right.
So, diversification is super important.
So it's about spreading out those bets.
Yes.
Okay. So not just about different assets, but different types of trades too.
Exactly.
Okay. So this brings us to step number 4. Diversify approaches.
You got it. Imagine a surfer who only knows how to ride these massive waves.
Oh, yeah.
What happens when the ocean's calm? They're step on the beach.
They can't do anything.
Exactly. And it's the same with trading, Having different strategies, it's like having different tools.
Right.
It lets you adapt to the changing market conditions. And the guide, it talks about 3 main approaches: trend following,
Okay.
swing trading, and then dip buying.
Wait, hold on. Can you break down those 3 approaches for me? What's the difference between trend following and swing trading?
Okay, so think of swing trading like surfing. are trying to catch like the best part of the wave. You're not trying to ride it forever, you know?
Right.
You're looking for a quick ride, get in, get out, and make some profit.
So those like short-term bursts?
Exactly.
But
Trend following, though, that's more like sailing across the ocean.
yeah.
You're riding this long-term current, and you're holding onto your position as long as that trend keeps going in your favor.
So swing trading is like, you know, catching those short-term bursts. Trend following is like riding the long game.
Exactly.
Okay. It's like having those different tools,
Right.
like you said, in your toolbox. All right, now for step number 5, and this is a big one.
Yeah, the big one.
This is matching your style, you know, with all of these different strategies.
Yeah.
How do you figure out which one is right for you?
You got to know yourself.
Okay.
Are you the type of person who can stay calm and patient when the market is going crazy? Or do you prefer those, you know, quick wins? The best trading system is the one that fits your personality and your goals.
It's like finding a dance partner,
Yes,
right? You need to have good chemistry.
absolutely.
Okay. The last thing the guide mentions is discipline and drawdowns.
Oh, yes.
And those are like those times where your trades dip, right?
Yeah, those scary dips.
Like those are unavoidable, right?
Oh, yeah. They happen to every trader. Think of them like speed bumps on the road to, you know, success.
Mm-hmm.
It's easy to panic and, like, change your plans when you see them.
Yeah.
But the real key is staying focused and trusting the process.
So it's that mental game.
Totally.
It's like you need that resilience. So it sounds like that separates, you know, the pros from everybody else.
He really does.
Okay. So let's do a quick recap of the 5 steps.
Right.
First up, you got to build your watch list in those liquid markets.
Mm-hmm.
Find those signals that have a high probability
Right.
of being, you know, good trades.
Yeah.
You size your positions wisely. Remember, volatility.
Right.
Don't overextend yourself.
Don't put all your eggs in one basket.
Exactly. You diversify your approach,
Mm.
have those different tools in the toolbox, and then finally, you got to match your style
To your goals.
to your goals. It's like this treasure map.
It is.
It's a trading better.
Absolutely. That's a
Awesome.
journey. But like any good adventure, it has to start with a spark of curiosity, right? So now that you know the basics, I'm curious, what market or asset are you feeling the most drawn to?
Ooh, that's a good question. There's so many different things. This has been a fantastic deep dive.
It has been.
So listeners, I encourage you all to go out and explore, maybe pick a market, do your research, even try paper trading to test out what we talked about today. Because honestly, the world of price action trading, it's huge and it's waiting for you.
Absolutely.
So thank you all for joining us today for our deep dive. We'll be back again soon to explore a whole new topic. Until then, happy trading.
Happy trading.